Good afternoon, everybody, and welcome to Profit Playbook Live for Forex, Futures, and Stocks with myself, Jody Samuels, Juan Maldonado, and Neil Bradford. Please read the disclaimer to yourselves. It's really important to read the disclaimer. Thank you. So this was our event schedule. On Monday, Juan and Neil discussed the Forex markets. And I know that you saw the synergies between having an Elite Wave analyst by your side and using the Wavy Tunnel Pro strategy. So that was fantastic. And yesterday, Juan and I delved into the futures markets, and I hope you found that helpful. And today, we're going to dive into stocks. So we hope that you'll get a lot out of today's session, as well as the other two sessions. And we hope that you consider joining us for our bundled package so you can see and see the benefits yourself of having Juan by your side while using the Wavy Tunnel Pro Elite tools and having Neil as an amazing mentor in the New York and London trading groups. So over to you, Juan. Let's get started.
Thank you, Jody. Hello, traders. Welcome to the analysis. Today, we're going to have a look at some stocks. Before we start, a quick comment about the S&P that we were following yesterday, and we were planning yesterday the next step. So yesterday, traders, we were talking that the first thing was that this area, we were likely to have a leg down. And that then when we have the leg down, we could define if it was corrective or if it was an impulse. So the price actually started the leg down as expected, beautiful leg down. So if you were trading the European session, you have this good edge to follow the leg down. And then today, in the trading room, today in the morning, we focus on finding the end of this second wave. And we got this entry here on the 5-minute chart on the ES at the 628 area with this stop loss, 8 points. And it was possible to actually trigger faster. And it was possible then to grab all the leg up today, or at least a good part of it. So just to follow up after the analysis yesterday. Today, traders, we are going to focus on the stock market. We're going to start with Apple, which has been moving down after all the news last weekend. We got a significant leg down. It was a good discount, and the price finished the corrective wave, fast price action. And then after the second wave, we start seeing the price climbing into a 5-wave sequence for the wave 1. Beautiful 5-wave sequence. A second wave that comes with the gap in the middle. That was for the session today. And from there, the price starts recovering. So we are going to jump into the lower time frames to find how was this reversal, how easy, how difficult it was to find the end of this second wave, and of course, what we can expect next for the following sessions. On the 5-minute chart, right here, we have the clear 5-wave sequence right there. So there is 1, 2, 3, 4, and 5 with its divergence between the 3 and 5. That's great. Then we have the second wave. That could be it. Sometimes we prefer the 3-wave sequence and the price building the ABC and the price rejecting and all that narrative. But sometimes we don't have that perfection in the wave count. And we have to, as Jody was telling yesterday, we have to be sometimes flexible in order to understand the market. See, we are looking all the time for perfection. Sometimes we are not going to get that, and we can miss the trade and we can make mistakes. So it's better to understand the flow of the market rather than trying to have specific patterns on the market. So here, traders, we got another 5-wave sequence that could be a leading diagonal wave. For tomorrow, we can have a little retrace and then to start looking for the bullish trade after that. But let's have a look at the opening. So the market opens here, 9:30 a.m. Eastern. Let's zoom in into this area so we can start developing the narrative around this trade. The first candle, well, of course, is a gap, but it closes green. Okay, there we are just waiting. This information is not enough. With this candle, we don't know what's next. The next candle starts showing the strength of the move because it closes far away from the previous close, from the previous high as well. So it starts showing a good bullish intention. And here is the first trouble that we see during the session. Okay, so we're seeing now the price is slowing down, kind of sideways. Okay, that's good. And here comes the test. When this candle shows up, this red candle here, at that precise moment in this storyline, you don't know if the price is going to continue back to the low or if the price is going to reject or is going to reverse before hitting the low. At that time, you don't have a clue. You can start thinking, okay, this could be my wave 1 and this could be my wave 2, or this could be my wave A and B or whatever. But the next candle, traders, comes with a lot of information. We always tell the clients that each candle comes with fresh news. Okay, so the next candle is telling that the bearish momentum is reducing. The size of the candle is smaller. And the next candle is the most important candle of this storyline, because for the very first time, we are seeing the weak supply and probably demand hitting the market strongly. That tail tells a lot about this storyline. When you have that tail, you can start planning the buy trade above the high of that candle. The next candle is a test of the previous candle, fails to make a low. The next candle validates the setup. So we are working on this area here. So this one validates the idea of this candle. And from there, we can start building or waiting for the move up. The minimum target for this setup, for this session, will be this high over here. So at least we will be looking for that target. So we wait. After that, we wait, if possible, to book some profits once we reach the 1-to-1 risk-reward ratio. The stop loss is just here below the low, so this is the risk. So at the 1-to-1, we can book some profits. And then we wait. The price starts moving up. Higher highs, higher lows. All good. All good. And finally hits. And not only hits, it breaks up the previous high. From there, you have to be more careful. Here you are day trading, and this area here is going to be a little bit more risky. Plus, we are getting into the noon. We also like targets, time targets in terms of the session. At noon, usually the price starts moving sideways. And from there, that's it. At the end, we can just book the profits with the very first candle that moves below the low of the previous candle, and that's it for the session. Yeah, grabbing this part of the trade afternoon, not that easy. You know, after we have the successful trade in the morning, I believe this is it. Okay, so now we have the leading diagonal wave. 1, 2, 3, 4, 5. The plan, well, the market's still open. Let's see where it's going to close. It probably starts the three-wave sequence. But tomorrow, once we have a good discount, we can buy it and we can continue following the move up, because overall, this is likely to be the start of wave 3. Now, traders, we're going to have a look at the wavy tunnel system to see how the wavy tunnel can help us to validate these trades.
Thank you, Juan. That was great. Now, Juan started looking at the hourly chart and then moved down to the 5-minute. I would like to just do a quick top-down approach on Apple. So on my screen, you see the weekly, the daily, the 4-hour, and the 1-hour. And then I'll go to the 5-minute. But I really need to get that perspective. I'm more of a swing trader. I look mainly at the weekly and the daily. To be fair, I'm not a day trader in stocks. But that's okay. Doesn't mean we can't discuss the setups. First I want to see the strength of the stock, and Apple is very strong. Looking at the weekly, we have just come down into support into the wave. So that's good. That's a good thing, because we're no longer buying up here where we see the purple arrow, the purple semaphore, the royal, we call it. But we are buying in this area, which is good. Then we look at the daily, and the daily in stocks, I'm just going to open this up. One of my favorite trades for stocks is the breakout 4 trade, and all of our scanners scan for the breakout 4 trade. And that's when we have a purple arrow or a purple semaphore, a royal, and then we have a very deep correction below the tunnel. And we also see the yellow bungee going to the lower reversal zone. So here we have the gray arrow. So this is perfect, because this showed up on our scanners to buy, and this was a great buy, as you can see. We moved up and then we came down. So we had a nice 5-wave sequence up and a nice corrective pattern down. Now let's just quickly look at so I need to look at that to gain perspective. So now I see that on the bigger time frames on the daily, we have had the correction already. So I'm thinking, okay, let's buy it. So now we can look at the smaller time frame. So now I am going to, let's just skip the 4-hour for a minute, and let's look at the hourly, and then we'll move down to the 5-minute. Okay, so on the hourly, whenever we have like the purple semaphores, those are the biggest swing moves. The gray is the next big swing move. So this is a nice move up where the wave has crossed above the tunnel. And by the way, when the wave crosses above the tunnel, we're in bullish territory. When the wave crosses below the tunnel, we're in corrective territory on the smaller time frames. So when let me just make that clear. That's why Apple is just so very, very bullish, because the wave is above the tunnel on the weekly, the wave is above the tunnel on the daily. There's no risk at that. And that's what I look at, the weekly and the daily, to see if the wave is above the tunnel. The other thing that I didn't tell you is this is a multi-time frame indicator. So this is just one higher time frame and one lower time frame. This shows you whether the wave is above the tunnel or not. And you see that on the weekly and the daily, the wave is above the tunnel, which means that we are in bullish territory. So if you have this on your charts, you're good to go, because the smaller time frames will cycle red, meaning the wave will go below the tunnel and then go back to green. Okay, but as long as the weekly and the daily are positive, we're good. So now let's go down to the hour. Now let's move down to the 5 minute. And I will talk about, like, go on the heels of what Juan spoke about. See, this data isn't so great, is it? Okay, so we gap down, and this is basically when we gap down, and this is where the market opens at 9:30 in the morning, right over here, and this there. And what we're looking for is, like Juan described. I don't know, this data doesn't look so good, because I have a glitch here. That's what's happening. Okay, I'm going to just pull over my trading view chart, okay, because it's a little bit cleaner. Yes, we do have this on trading view, and even though we don't offer it formally, I do offer trading view as a second free platform that you can get our indicators on. So you choose the one that you want, and then I will give you the trading view for free so that you can actually have our indicators on 2 platforms if you'd like. So here we are at the market open, or not yet, at the market open. And then with the semaphores, we've already determined, first of all, by looking at the bigger time frames, that we're bullish. And this, when we have a purple and a gray, the gray being the second swing, we have to take a look. So one of our patterns to be buying after a gray, after we've had a significant drop, which we did, we look for either a gray blue blue or a gray red red in terms of semaphores. And we initially had the gray blue blue in terms of the semaphores, and we failed to make a new low. So any place to buy it after we have that significant retracement and we fail to make a new low, we leave a stop below the lows and we can go long for day trading. And what are we looking for? We're looking for an initial move to the wave, and then we're looking for a move above the tunnel. That's our target. You can also look at the red, and this is a good area to buy on the red semaphore. And then when we get the gray semaphore on the top side, this is when, that's for day trading, that's enough for us. Like, we're not looking for anything more on the 5 minute chart. Okay. And of course, when the wave cycles back up above the tunnel, we would be in unanimous bullish territory for the 5 minute chart as well. Notice this piece to the left. The wave is below the tunnel and we continue to drop. Once we get that purple semaphore, this is when we expect our price to wave, and then we retrace below the wave, and then we have the fill the gap, which is the move to the tunnel. So this was one trade plan for this move, and this is a second trade plan for this move. And we're always having corrections, so it's not going one way. But this is a significant bearish story that is telling us we do not want to go long in here. We don't want to go long until we have completed the completed the move, and we look for divergence in the awesome oscillator for that, and we just take nibbles at this point. Okay, nibbles, because we might have decided to buy down here, although we didn't have divergence in the awesome oscillator. That's why it's important to be patient and look for, like, all of our clues for the markets turning around. So that's what I have to say about Apple. Over to you, Juan.
Thank you, Jody. That was fantastic. So we can see the power of the wavy tunnel indicator, because it helps us to validate and to add confidence of the setup that we are following. Here we have Tesla, another great example these days. Let's gain a little bit of background of the price action. On the left, we have the 5-wave sequence. 1, 2, 3, 4, 5. So we can start working with this leading diagonal wave. Then, of course, this area, the 372.83, it's a pretty important area, because if the price continues, of course, it's going to invalidate this wave one and we can have a deeper sell-off. But without having the price there yet, well, we can consider the bullish scenario. So we are going to focus, traders, on the price action inside the wave, the second wave, because there are many details that are quite easy to follow. And after these 3-day sessions, 3 days sessions, we have you have been seeing a lot of examples and the difference between the 1 to 3 and the ABC, for example. That one is important, and you are having many tools to apply in your trading when you are following the waves. So let's move into the 5-minute chart. I want to focus on the lower time frames here, and let's zoom in. Let me reset the scale. There we go. So here, traders, we have the first leg down, similar to Apple. But on Apple, we were saying that this could be the end of the leg, and the price is building a leading diagonal wave, and then we're expecting a second wave to continue. That's what we were talking about on Apple. But here, the price didn't build that leading diagonal or that impulse. Instead, the price did a leg down. So the question that here we need to ask is if we can see any signal that could tell us that this stock was more likely to push down rather than move up as Apple did. Because look, so far, here to here, we have the same narrative as Apple, exactly the same story behind. So we can buy here, no problem. We can buy there. There is no problem at all. It's the same story. But what is different is when the price reaches the high. So when you have a leg up, in market structure, and the price builds a retrace, and now you have the skill, you have this special power to find out that this is a corrective wave. Remember, small candles, rejections, and all the elements. And of course, in the trading rooms, once you join, you are going to continue learning many details that we talk day by day. But something that you know, something that you are looking is for this previous high here. So when you trigger your trade and you buy it, you are looking at least for the price to climb to this previous high. That's the minimum thing that you are looking for. If the price breaks that level and you start seeing a good follow through, some nice candles moving higher, okay, you can try to ride that wave a little bit longer. But on the other hand, if the price gets there and instead rejects and you start seeing the opposite, right there, you need to understand that your bullish trade is in trouble. And when you have this rejection of the previous high, actually, the probability is bigger to have the price coming down to this area or even to this area. So at that point, you can consider closing your trade, and if the signal is really good, you could consider the sell trade. At least here to this area. If the price breaks down without problem, keep it. And then you check again on the next level. So now let's have a look at the application of this simple system into this area. So the bullish trade, same as Apple, is here. We can use any high or any trigger that you like. So what we know is that we are likely to go back to the high. Okay, we did. But what happened here? So let's zoom in a little bit into this example, because I really want that you get this point, because it's one of those things that can change your trading forever when you really understand this concept. Okay, let me try here to fix better the scaling. There we go. So we have a nice view of the price. Okay, traders. So we are there, and look, the price moves back to the high. Great. But look at that candle. What is that candle telling? Remember that each candle comes with a news, comes with a story, comes to add something else. And that candle is telling that demand is quite weak and supply it's strong. Okay. But also you can check volume. And when you check the volume, you can see that at that area, volume is below the average. So weak volume, trying to break up a key area, that's not going to end well. That's the other point. Because in order to have a successful break of an area, we need good volume. Look at this breakdown here. Look at that volume. Wow, that's powerful. So we know that the follow through, yeah, could make us some retrace, whatever, but we know that the follow through is to the downside after that. But is that volume enough to break up a key liquidity area? So at that stage, when you see that the price doesn't have a volume and is rejecting, and if you are long from this area, it's time to close your trade. That's absolutely clear. And if you like it, now that we are seeing the narrative to the other side, we know that we can go back here, 381, or the 380 area, because there is not enough power to continue higher. So we can consider selling the low of that candle or the next candle, whatever we prefer, and this will be the risk. We always place the stop loss above the high. That's it. And then we start following the leg down. And once we reach the 1-to-1 risk-reward ratio, we can book some profits. Then, during the session, the price continues. And as you can see, the volume, the bearish volume, starts, the supply volume starts increasing. Where? At this area. So you are seeing that the supply volume is increasing when it's reaching the area that needs to break down. Okay, so that's something. You can see the difference. When the price approached and actually hit the high, it came with no volume. But this time, even the price is low, you know, we say, oh, the sellers, the supply is not likely to trigger here at the lows. That doesn't have any sense. Well, they are doing that. They are selling. So so we're seeing a powerful intention, let's say, to break down the support. So if we are short from this area, we can keep it. Why not? Or if we think that this is it, look at this candle here, we can say, okay, this is it. This is it for me. Right? I'm seeing good volume at the area, and probably we're going to break down, but this candle is rejecting. But look at the volume of that candle, right? Of course, we don't have enough time here to talk about that, but once you join, you're going to have all access to all the lessons that we have on the website about these topics. Okay, traders. So the price sell-offs and accelerates, and that's where we are right now. So tomorrow, what we are going to start working on is finding the reversal. So far, we don't have any reversal. Tomorrow, we are going to look for the reversal. The reversal could be if the price slows down at this area and we have a good reversal, or if it's not too clear, remember, you can wait for your 5-wave sequence first, right? And then your corrective wave and start buying from there. Because sometimes fading the end of the corrective wave is not easy, especially when we have big candles or it's not too clear. So if it's not clear, wait for the 5-wave sequence. Now, let's have a look at this same exercise, but from the wavy tunnel point of view and the top-down approach.
Thank you, Juan. That's great, 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 great. Okay, it's interesting that Juan said that Tesla is a little bit different than Apple, and I would concur, and I would even concur on the bigger time frames. This is really interesting to me, and I'm just going to put it out there, what I'm seeing, but I'm not sure. Okay, let me just put it out there, what I'm seeing. All right. This is the Tesla weekly on the left-hand side. You can see the Tesla weekly up here, the upper left. On Apple, Apple was already in the wave. In Tesla, we've corrected down to the filter. This is the 12 EMA. We've corrected down to the filter. We do have a red candle close below the filter, which begs the question, are we going to go down to the wave and have a deeper correction? Okay, but I'm not sure yet, because the other thing that I'm seeing is the yellow bungee, which is the bungee that I tend to follow religiously, has just dipped below the lower reversal zone. But what's even more, another difference between Apple and Tesla when we look at the daily chart, and let me open this up for you, is on Apple, we came all the way down to the tunnel and we got the gray semaphore. So this was really, as one would say, a deeply discounted stock to buy. Tesla hasn't had the same correction. We are just below the wave here, and the yellow bungee is still in the upper reversal zone, or just below the upper reversal zone. So the question that I have is, okay, is this the end of this move down, or is something going to propel us to move lower and actually, maybe, I don't know if we would fill the gap. That's quite a big move, but I'm just not sure. So I think we have to keep an eye on the low price for Tesla. We definitely have to keep an eye on that. Now, if we turn around and we start to move higher, well, fine. This could be all of the correction that we see. Looking at the 4-hour and the hourly, well, it's no surprise that the wave is in the tunnel on the 4-hour and the wave is below the tunnel on the hourly, because we have a red daily candle and a red weekly candle. So like I said earlier, the smaller time frames will cycle down, the wave will cycle down. And we can see this on the multi-time frame indicator. The weekly and the daily are comfortably in the green zone, so bullish, but we could be in a faced with a deeper correction here, okay? And you can see that the 4-hour, the tunnel is in the wave, or the wave is in the tunnel. That's why the 4-hour is yellow. That's the third row here, the bottom row. That's the 4-hour. The middle is the daily, the top is the weekly. So we have yellow, which just means that the wave and the tunnel are touching each other. Okay, now looking at the awesome oscillator, we have a peak right over here. So I'm pretty sure this is a corrective move. My question is, how are we done with the correction, or is it going to continue lower? But either way, and by looking, Juan will be able to tell you what he's seeing in the bigger time frames. Once we complete this correction, we will have some kind of a move up. Whether we move up in 3 waves or 5 waves will determine if we are going to go lower after that. So now let's move down to the 5-minute, because I do have something to share on that too, based on what Juan was talking about. Yeah, so this is the 9:30, and notice this is also in a different position than Apple, like Juan said. With Apple, we came in and on the wavy tunnel, we had a gray down here. So we had purple, gray. So we were ready to start buying. This was a different story, because we already did our PW fill the gap, and we got a purple semaphore up here, and then we broke down. So this is where we we think, okay, today is going to be a bearish day because we're starting from up here. And when we get our red, this is the perfect opportunity to sell Tesla right here. Okay, we're in the wave. The wave is comfortably below the tunnel. We are already questioning, are we going to have a deeper correction or not? So really, this was, you know, I mean, even if we started from here, if I saw this, I would say, okay, we've got to, I might wait patiently for either the blue or the red, but it's a different picture. It's more of a bearish pattern. Now I just want to, I took a screenshot of Juan's wave count because I said, oh my goodness, these semaphores match up with Juan's wave count. So here Juan has the end of the wave 5. This is the 5-minute chart, and we have the purple semaphore. And then he labeled this an A and a B and a C. Well, what do we have here? Purple, red for the A, B, red for the B, purple for the C. So I thought that was interesting. Okay, just a little aside there. So that's all I have to say about Tesla. The jury is still out, and as to whether we have seen the end of the correction or whether we are going to, go a little lower and approach the wave on the weekly and the tunnel on the daily. I'm pretty sure even before that happens, we should have some kind of a correction off of these lows, but still, that's the question that I have in my mind. Over to you, Juan, for the next one.
Thank you, Judy. That was fantastic. We can see how we can match the semaphores with the wave count, and that's going to give us a powerful way of looking for the end of the waves and to have an idea where those waves are going to start changing the direction. So we can use those semaphores to book profits, to trigger trades, to wait for minimum requirements. Okay, so here we have NVIDIA. NVIDIA has been pushing higher after the rejection. So this one is a little bit more advanced than the others, let's say, on the 30-minute chart, because look at this beautiful thing. This is one of my favorite setups. We have the price reaching a fresh low, and the momentum is crystal clear that there is not enough momentum to continue, that the price tries to break down, but doesn't have enough power, doesn't have enough fuel to continue. Also, the same exercise that we were doing with Tesla, volume is dropping as well. So momentum is dropping and volume is dropping. This creates a powerful combination that it could be a rejection. So you wait, always wait for the validation. Never trade based on what you believe is going to happen, what you hope is going to happen, because trading doesn't work like that. You need to have some validation that tells that what you are seeing or what you are thinking is actually a possibility. So, of course, we are not going to trade only based on the divergence or the momentum. We need to match these together with the price action. And of course, here, Jody is going to show us the semaphores and the distance that we have here between the price and the tunnel, the wave and everything. But look, there is a rejection. We have some good green candles showing and returning back above the wave A. So you wait, usually on the zigzag, you wait for the price to drop under the wave A and return. Remember, wait for the drop, wait for it, wait for the return. Once you have that whole process, after that green candle is where you can start acting. is where you can start finding your trade. Well, wait for a little discount. Sometimes we have a little discount. Sometimes the price goes directly to the moon. But anyway, you have that's your validation, and you know that from there, as we were talking before on the previous analysis, we know that the next level is at least this one here. At least, right? And there we will see. We are not going to worry what is next after that. We will see. Now, in the internal part of the price action for the wave one, we have an impulse already. So we can say one here, that's a leading diagonal, 2, 3, 4, 5, right? That's our 5-wave sequence with a beautiful wave 3 in the middle, with a gap, with everything, and seems that we are getting to the end of this first leg. The next step is looking for a discount. So remember, when you clearly see the 5-wave sequence in your chart, you're not going to buy there, right? If you didn't buy here at the start or at the retrace, or at the last retrace for the wave 4 as the breakout 4 trade, you don't want to buy here. That's too late. So you wait for the retrace. If you have a zigzag, even better, and you buy it again if it makes sense here at the end of the second wave. And don't forget to buckle up. If you don't buckle up, you can be in trouble, right? It's risky. Right in the wave 3, without buckling up before, because the wave 3 is a powerful wave. The wave 3 is a fast wave. So just buckle up, enjoy the ride. It's going to be pretty fun because you are going to make a lot of money. That's when you capture the wave 3 before it starts. It's the best trade because you don't need to suffer, because it's a nice ride to the upside. And then when the wave 4 starts, you start getting ready for taking out your profits, because you know that wave 5 is going to come at the end, is going to show up at the end of the cycle, and then another retrace is happening, and then a new storyline is going to start building around that narrative. So traders, we are there. We are getting ready. We are looking for the discount for the second wave to ride the wave 3. Let's suppose that you were able to start your trade from this area, or this area, as you can see, is quite easy. So if you are already in that trade, well, book some profits. Wait for the retrace and add again. So it's reduce and add to your position. So you reduce by booking profits. You wait to confirm that the bullish story remains in that direction. And how to do that? Well, you need to have small candles happening here. You don't want to see something like this, right? You're not going to add to your trade if you have a candle like that one. But if you have the 3-wave sequence, you have a nice rejection, then you can add to your position. And don't forget to buckle up for the wave 3, right? So let's have a look at this same storyline on the lower time frames, like the 5-minute chart. Because you can trade on any time frame. That's the beauty. When you learn how to trade properly, you can trade on any time frame. Any time frame. You're going to see exactly the same. So here on the 5-minute chart, the session, let's see where the session started today. Here with this gap. Okay, so this one is different traders to the others, because we were seeing on the others, like Apple started with the gap on the other side, and we were bullish, so we can use the discount to follow the leg. But the gap happens, And we are not going to sell NVIDIA when we are in an impulse. We are not going to do that. We are not going to sell. So we will need to have some sort of discount, some sort of corrective wave to buy it. Like, at least something like this. This one is beautiful. Look at this one here before the previous session. So for the big picture trade, it's pretty clear what to do. But for the day trade, the buying here, I don't see how. Well, probably later here when we have the corrective wave. We have there the 3-wave sequence. Look at that beautiful. Let me zoom in because that one is a good example. Probably that could be the first trade on NVIDIA today on the 5-minute chart. Let's focus here. So the price comes down. Look, we have this candle. That's a warning that supply is pretty weak, but we have good volume, so we wait. Anyway, the price never move above the high of that candle. Next candle, yep, we're seeing trouble on the supply side. No candle moves above the high of this candle. Next one, same. Oops, we got for the very first time the candle moving above the high of the previous candle. There, here, and almost here. So this ignition candle, let's call it like that, tells a lot about the storyline. You can see how checking candle by candle, you are going to make sure to trigger to ride on the wave at the start of the wave when it's starting. So right there, you can trigger from there if you like. And the stop loss is just here. The risk is tiny. This is all the risk. Because why risk it more, right? If the price continues, why? It means that supply remains driving the leg. So you don't want to be there, right? So traders, that's the point. So that one is a good one. Probably the first one. And look all the result that we got from that leg. Beautiful. Okay, so now traders, let's have a look at this same setup from the wavy tunnel perspective.
Thank you, Juan. Okay. Okay, we're looking at NVIDIA. So we are starting from the top-down approach, the weekly. This is the same picture as Tesla, where we're comfortably above the wave and we come down into, well, no, not Tesla, Apple. And we come down into the wave, okay? The daily chart is very similar to Apple, where this is where we came down, we had a deep discount. Now this correction is pretty steep. I mean, it didn't take very long for this correction to happen because of the news that caused it to happen. But we got our gray semaphore, and this is the first time that this gray semaphore appeared. It did not repaint from here to here. So this is our breakout 4 trade. This is our legit breakout 4 trade that showed up on every single scanner, just like Apple did on the daily. So when we get that, we have to think, and we're also in the wave on the weekly, this is where we get interested. Okay, this is where we get interested and we say, okay, now we can go to the lower time frames. So let's just look at the 4-hour. Well, you know what? I want to look at the hourly, okay? I want to look at the hourly, and then we're going to go down to the smaller time frames. This, well, okay. You see the purple semaphore on the 4-hour and the hourly? This is the gray semaphore on the daily. So when we say go to a smaller time frame to take the trade, you can go to the 4-hour, you can go to the hourly, or you can go to the 15-minute or the 5-minute. This is the same level, the same time that it occurs. When you see the purple semaphores on the lower time frames, this is your buy area. Now we are on the hourly, the wave is below the tunnel. So when you see that, the first trade that has to happen is the price to wave and then the fill the gap trade. And then the wave crosses over the tunnel and becomes bullish. If NVIDIA is going to continue to move up, then that's what will happen with the hourly and then with the 4-hour chart. So I mean, this is a perfect time to be talking about this because we have hit our breakout 4 bottom that shows up on our scanners, and we see that on the hourly and the 4-hour as well. So let's go to the 5-minute now. So now we're bullish here. Let's go to the 5-minute, and if I have good data here, then I'll stick to this. Perfect. Okay. So I want to bring your attention to this point here. This is where we saw the bottom on the daily, the gray semaphore, the breakout 4 trade, and this is where we saw it on the hourly and the 4-hour chart. So notice what happens. We have the price to wave, which happens to go to the tunnel. It went straight. And then we have the retracement, and then we continue up, and then the wave crosses above the tunnel. But notice how, I mean, the wave crosses back down below the tunnel because the 5-minute is just a small time frame. So let's fast forward to today. You see the data is not cleaned. You can see these, the data is not cleaned. I'm just going to move. I'm going to move over my trading view chart. Okay. Okay. One other thing that I'd like to mention, one of our trades is the Royal Cross trade. The Royal Cross trade is when we get a purple semaphore and then the wave crosses down below the tunnel, we typically look for a lower Royal semaphore. And in between, one of our really beautiful trades is Royal Noble Noble. So these are Elliott wave degrees of some sort. So Royal Noble Noble followed by a purple semaphore. Okay. So when this is the 5-minute chart. Okay. So this would have occurred, let me just spread this out for you. Okay. So this would have occurred yesterday. Now, I guess yesterday? Monday. Okay. Is this the 5-minute? This is a 30-minute. Oh boy. Okay. Good going, Jody. All right. Anyway, that's what showed on the 30-minute. Now let's go down to the 5-minute. So I spotted that Royal Noble Noble trade, so I thought I would point it out to you. Now on the 5-minute, we always start with wavy tunnel at the purple semaphore. And the first thing is we do a PW fill the gap. And then we have a retracement. Juan pointed this out. We have a nice 3-wave retracement. And then look what's happening. The wave is crossing above the tunnel. So this is where we are at 9:30 at the market open. Now with this system, with the wavy tunnel indicators, like you see that we're in bullish territory. The wave is above the tunnel. We've hit a bottom on the weekly, the daily, the 4-hour, the 1-hour. We are starting to move up. Our market cycle is PW fill the gap, and then the wave crosses the tunnel. So we're in breakout 3 mode, which is wave 3 mode in our terminology, okay? So what that means is every time we get a blue semaphore into the filter, it's buyable. You can buy it. When we get to the purple, then we have to back off and we look for a correction. I can make these dots bigger. They're kind of small, but this is a red down here, and we have blues leading into the red. So when you get the red, which is the next level above blue, you have to start looking at this as a potential buy. And Juan noted this level as well. And the other thing that we can do is we can look at the bungee, and we see that it's bullish because the yellow is in the upper reversal zone the entire time, and that's bullish. And every time, like down here, when we got the red dot, what happens to the other bungees? We get what we call a stretch away. So all of the bungees stretch away. In this case, they stretched away into the lower reversal zone right over here, and then snapped back up to join the yellow bungee party. So they stretched away and snapped back up. That is a sign to be buying. That's a sign to be buying. We have already reached the limit. We're already bullish. So when these bungees come into the lower reversal zone, we want to be buying. So this was a nice buy area as well for NVIDIA. And then we have to see what happens after this. We got a purple semaphore. We have to see what happens after this. But that was like a couple of buy areas to be buying today in NVIDIA. And I gave you the context for why NVIDIA was bullish today. So Juan, what do you think? Are we done, or do we have time for one more quick one?
Sure, Jody, we can have another one
Okay.
really quick.
Okay.
Okay. So the last one, traders, is Intel. On Intel, we are looking for a reversal, a bullish reversal. When the stocks are expensive, are hard to profit from the legs that already happened. Imagine buying an Nvidia, the highest price ever, or that type of narrative. So as Warren Buffett says, you need to buy cheap. You need to buy when there is blood in the streets. That's something that he says. And when a company is in trouble is when we need to start paying attention of supply and demand of that stock. Intel has been in real trouble over the last months with a lot of issues, and that makes the stock pretty cheap. The next step, because we can't buy a stock just because it's cheap. That doesn't have any sense. We need to find what is cheap, and then check if someone else is buying or if someone else is trying to accumulate that stock. And that's where technical analysis comes in. That's where Elliott wave comes in. And in this case, traders, this is the same exercise we have been doing these days. And that important rejection after the zigzag is a clear signal that the direction is bullish. And the next step after we have that rejection is to test this area here, that soon we are going to get that. And if the price successfully breaks up the area, that's where the wave 3 will start showing its power, because of course the wave 3 starts at the lows, and we can follow that leg and that direction, and we can continue buying on the corrective waves. So nothing better than being able to buy a stock at the best price. That is when the company is in trouble and we are seeing potential to start the growth. So from technical analysis, I believe that looks pretty good, and this has some good potential. Also, the beauty of these systems is that we can trade with minimum risk by having smaller stops. And on the lower time frames, today, the session starts with a bearish gap. So this one is good. Like the only one that I was in a little bit on trouble to trade today was NVIDIA, because the gap was to the upside and harder to do something. But look at this gap. So a lot of supply at the market open, but then immediately it rejects immediately, and this is pretty powerful, because as we were seeing before, at the end this is a tail, right? This is a long tail. If we combine these three candles, then we have a test, tiny candle, the next candle moves above the high of that candle, and boom, the powerful move up for the wave 3. So for the day trade, this one was fantastic as well. So now let's have a look at this stock from the wavy tunnel perspective.
Okay, let's do it. Well, looking at Intel, I think I think you know what I'm gonna say. I think you do. I'm gonna say I don't like it on the weekly and the daily. Why? Why am I saying that? Because the wave is below the tunnel. But as Juan pointed out, at some point, a stock is going to be in bargain basement territory. So Intel is in bargain basement territory right now. And we did get a purple semaphore on the weekly. We got it on the daily. Where is the other? Oh, interesting. Oh, okay. I don't have the multi-time frame indicator here. I think okay. They would be red for Intel. They would be red. So we have 4 hour, 1 hour. Right. So picking a bottom. This is where we're getting so many, like we get the purple semaphore, we get the noble semaphore. So this means that price didn't make a new low. This is the price low. So if we want to find a bottom, Juan showed you how to look for that with the price action. That's what you do. You're finding a bottom and you know where your stop is below the low. I mean, it could be that it's ready to start to move up again on the daily, doing a PW, price to wave, and then fill the gap. I don't know, but we're certainly cheap enough to go down to the smaller time frame, which is what Juan showed you, to look for levels to nibble on. Now, I just want to show you the scanner on MotiveWave. This is on MotiveWave. So this is very powerful. I ran it on 500 stocks and we got 86 results. So let me just show you here one example. This shows us this is COP, the 1 week, the weekly. This shows us all of the deep discount setups, the breakout 4 setups. I'm just going to show you this one example. And where we have the purple semaphore at the top, and then we don't have all the semaphores on here. It just shows us the purple and the gray because it's the scanner. And then we have the nice move down, and a nice corrective move up, and then the final leg down, and we get the gray arrow pointing up. So this is what our scanner shows. It shows one of the scans is for the breakout 4, and then you can scan for the purple semaphores, you can scan for the gray semaphores, you can scan for the Royal Noble trade, etc. So that's really all I have to say. I think this was a great session. Now I want to just summarize it for everybody. Let's just move here, and let's just summarize the last few days. We started out by talking about Forex, and we had Neil joining us, and Neil is a master of the Wavy Tunnel Pro indicators and looking at the scanner on MT4. And then we moved on to futures, and Juan does it all. He does Forex, futures, and stocks. I don't know how you do that, Juan. That's quite an undertaking, but you do it very, very well. And I showed you the futures markets that I trade actually on Ninja Trader, and I also have a futures trading room once a week. And then we moved to stocks today. So let's show you, like, we're bundling this package between the Elliott Wave and the Wavy Tunnel Pro desks. We count and you trade. The Elliott Wave desk and Wavy Tunnel Pro membership, your personal Elliott Wave analyst, strategist, and mentor. So that's Juan. You can develop a nice relationship with Juan. He's very open. He's he's constantly on the Discord channel answering any students' questions, etc. So he's very approachable, which is fantastic. That's what you want in an analyst, strategist, and mentor. And he's also a great trader. Unlock the power of LE wave analysis with expert insights, strategic setups, and personalized guidance. And our membership includes direct access to also your very own Wavy Tunnel Pro mentor and cutting edge elite tools. Now, we saw this week how uncanny the wave counts are with the Wavy Tunnel Pro semaphores, the indicators, how using the Wavy Tunnel Pro setup, it just explains the wave count in such a visual, beautiful way. At least that's what I find, and that's why I love it so much. And so I think the combination of the two is really, really great, because what traders need is confidence. So join today and start trading with confidence. Confidence to take the trades. That's what we need as traders. And you get a lot. I mean, you can go to the sales page, elliottwavedesk.com/bundle. I'll post it in the chat box here. Oh, it's already posted there. elliottwavedesk.com/bundle to bundle up the Wavy Tunnel Pro Desk and Elite Tool Scanner with the Elliott Wave Desk and everything that Juan offers within the Elliott Wave Desk. You can see it right here on the screen, and you can go to the sales page and read everything. But we gave you a good taste of what's to come. So you will be able to view these recordings if you miss them, and you will be getting some emails from us to just conclude this, this week, which I think was great. And I think that's all I have to say. That's all I have to say. Let me just see if I have anything else. Yeah, okay. I mean, that's all I have to say. So thank you very much, everybody. We will stick around for a few questions. I'm just going to stop the recording now. Thank you so much, Juan. I think this was a really fun week doing some, analysis with you. I think this was fantastic. So thank you.
Yes, Judy, it was great. Thank you.
Yeah, okay.